I'm going to talk about two stocks to buy now here in June 2025. These stocks are set to explode. And in fact, I did up my allocation to $228,000 between these two stocks. So let's go ahead and jump into it. As you can see, the portfolio is currently trading at 958,000, approaching all-time highs in the portfolio, while QQQ is still down about 3%. Today, we closed out a nice little profit of $3,409 on cash secured puts on a specific stock I'm going to talk about, but I'm not the only one doing it. As you can see here in Options Trading University, we have 156 high-level traders and masterminders here. Tiago right here closed out a trade for $3,000. Jay today, $300 there. Kevin closed out an overnight trade of $943. Right, Sandeep made about $6,500, $4,000 here. Jason, $3,642, and Jay made about $1,000 there. So if you do want access to my trades that my clients are following here in the Ryan's Trade section and Leap's entries and exits, then click that first link down below in the description. We're booked out till the end of June, so July calls are opening up. So make sure to secure a spot. Now let's jump into it. Let's talk about the markets first. This Friday, the US unemployment rate is being revealed, so that could potentially spike some volatility in the S&P 500, in the overall market. So do have some cash available for a potential VIX spike, for a potential, some volatility coming forward here on Friday. But overall in the markets, all right, I do see us just continuing to grind higher, okay? Everything is pointing up from here. All dips are being purchased. And as you can see, we are melting higher here on QQQ. So I believe we'll continue within this range, right? And just kind of do this melt up situation until we get to that 540 level. Now, 540 is previous all-time highs. That may serve as some resistance. So I do expect at 540, I will be clearing up some cash, having cash available, because I do think we'll have a little pullback from there before proceeding to new all-time highs. But everything's pointing upwards. We're not even overextended on the RSI yet. We're not overbought versus, back in July of last year, we did see a major run up, massive run up, super overextended. And then we saw a crash in August. And I think we might repeat that. Now, it might not be as drastic, but I do think we run up until mid-July and then potentially a nice pullback in late July or even mid-August. So I'm playing for that, but right now I'm super aggressive with my cash allocation levels. Obviously, the VIX is at 17, so we're in the zone of confidence and greed, but we haven't reached max greed yet, okay? When we do approach that $15 level on the VIX, or sub 15, that is a place where you need to be careful, okay? Because this is when everyone gets greedy, the market is running up to new all-time highs, and this is when you should have cash on the table, cash ready to deploy on any next VIX spike, okay? And we could get that, again, like in August, maybe in mid-August or late July, we might get a spike up to 20, 25 here on VIX, and when that happens, you want to have cash available to take advantage of the opportunity. So right now, VIX allocation levels, you should be anywhere between 50 to 75% allocated, 25% in cash. I'm about 10% right now because we are recovering from a massive crash, the 5th fastest stock market crash in history. So I am definitely over allocated right now, but I do expect the market to continue ripping higher. Now let's get into the two stocks that I believe are gonna rip much higher due to some recent catalysts. But before we do, if you do wanna make multiple six figures trading options and you wanna join me and 156 other high-level investors, go ahead, click that first link down below in the description to book a call. I'm even going to upload a brand new client testimonial here that you can watch. By the time you're watching this, that new testimonial will be uploaded. So check that out. Also, if you do want my free trade ideas, I give those away on Instagram and my free newsletter down below, so make sure to be subscribed to both of those. Now, let's go ahead and get into the first stock. The first stock is Robinhood. Okay, one of my favorite stocks in the portfolio. In fact, it's my biggest allocation in the portfolio right now because I'm so confident on this stock. The fundamentals are absolutely amazing. They might even be included into the S&P 500 this week or potentially next week. So, I think that's why it's kind of running right now, but this is a good time to kind of secure this stock in the portfolio before we see new all-time highs just over and over and over again. So Robinhood rising on potential S&P 500 inclusion. Now, if you take a look at the actual stock, I'm going to talk about something fundamentally that is going to propel this stock to much higher levels. I mean, it's already crazy that this stock is trading at a 38 PE, considering that it's only a $63 billion company, where Charles Schwab is like a multi-$100 billion company. I think that this company can surpass Charles Schwab. In fact, they have recurring revenue, which a lot of other brokerages don't have, right? Robinhood has their gold subscription, their gold $5 a month membership, all right? And we're going to talk about that. But if you look at recent margins, right? Q4 2024 net margin, 90% margins. Last quarter, 36% margins, okay? It's rare that you see companies with this big of margins that are also kind of tariff proof, right? This is a brokerage company. People are trading stocks, investing. So this company is just making fees right off of that, plus their recurring revenue on the gold subscription. So fundamentals are absolutely strong on this company. If you take a look at their recent quarterly earnings, their quarterly presentation, there's one thing on here that is going to propel this stock to the moon, okay? It's this right here, introducing Robinhood Cortex. There's not too much talk about this, all right? March 2025. It hasn't been launched yet. It's going to be launched probably in late summer, early fall. And basically what Robinhood Cortex is it's an AI-powered digital assistant designed to enhance a variety of Robinhood products in the future. The AI powers the app with insights, analysis, and trading opportunities, enabling you to better see what types of trades you might explore. Okay, so it's basically your own AI trading assistant that will be in the app. So now Robinhood is an AI company because everyone, and if we just take a look at how many people are subscribed to their gold, right? We're going to go back and go to their actual subscription rate on the gold membership. Okay. I'm going to scroll down here. As you can see right here, we continue to add value to Robinhood Gold. Q1 2025 Robinhood Gold subscribers represented over 12% of funded customers. So they have basically 3.2 million gold customers paying $5 a month. Okay, so they're making over $15 million a month recurring. And they're going to be adding the Robinhood Cortex, which is basically only for gold subscribers. So if you're using that AI and you're relying on that AI assistant to help you with trading and investing, you're not going to get rid of your gold subscription. Also, that's going to attract probably double the amount of gold subscribers. So their monthly revenue, recurring revenue, is going to go from 15 million to 30 million to 45 to 60 million. You're going to see these numbers absolutely skyrocket with this AI assistant. Okay, so this is just something I'm keeping in the works and taking a very close look on. And if we look at Robinhood, we're approaching upper Bollinger Band. Yes, okay, we're very getting a little overextended here. Okay, so as far as the types of trades that I'm doing on Robinhood, I'm playing it safe here. All right, and I'm going to show you two specific trades. I'm going to show you a cash secured put trade. Okay, so if you have enough collateral to buy 100 shares, which would be $7,200 right now, then you're good to go. You could sell a cash secured put and collect a lot of income, 3 to 5% on your money every month, right? And then what I'm going to do is I'm also going to give you a leaps play. Now, I'm waiting for this thing to actually retract back down sub 70. If it gets into the 69s, 68s, or even the 67s, I will be purchasing some leaps options, okay? And then riding this up for a nice bounce to new all-time highs. That's the current play for the leaps. But for cash secured puts, let me show you exactly what I did in the portfolio. So today, I closed out my 58 puts that I had. I had 19 contracts, and I opened up 16 contracts of $66 puts, okay, for an additional, $4,500 in income. All right, so what I would do is I would do this exact trade that I did. I would go out to July 3rd, and I would go ahead and sell the 28 delta, so super safe, 66 puts. And you're gonna collect $253. Let's do the math there. So $253 divided by 66 is a 3.83% return on your money in 29 days, less than 30 days. If you do this every month, right, you're collecting 46% on your money. And that's how I've been able to consistently get 45% returns year over year, compounding monthly, okay? So amazing returns there. If you wanted to go more aggressive, you go 34 delta, collect 325, right? Divide that by 68, and that's going to get you a 4.7% return. I went 66 to be safe, and I'm going to show you exactly why I did the $66 level, okay? So previous resistance and previous all-time highs was here at the $67 level. So usually previous resistance makes future support, and if we do come down there, okay, we're probably going to bounce off that $67 level. Now, if we don't, we break through, by expiration, we go below 66 or at 66, I'll get assigned 100 shares. Great, I got 100 shares, got paid 3.8% to acquire those shares, and now I can ride those shares back up. Okay, so that's kind of the mindset there. I went right below this previous resistance level, previous all-time highs, I went right below that, okay? So that's why I'm eyeing those. Now, for the leaps play, okay, I'm gonna go out probably 2 years. I'm gonna go out, let's just go out to January 15th, 2027, and I'll go for the 70 delta call options. So the leaps call options. That'll probably be, if it goes down below 70, it'll be the 65 strike. And I'll probably pay somewhere around 2,600 bucks for those. So, you know, 2,600 bucks versus 7,200 to control 100 shares. That's how you lever up your money, and you wait for, you know, Robinhood to bounce back up to new all-time highs, and you close out for a quick 20 to 40% on your money in less than a month, okay? So that's gonna be my play there. But again, we are overextended on RSI. We could head higher because of this S&P 500 inclusion news, or it might be a buy the rumor, sell the news situation. And once that gets announced, maybe it pops up to 75, and then it heads back down and sells off to 68, okay? So that's what I'm expecting, and that's kind of how I'm playing it. Now let's go ahead and get into the second stock, which is gonna make people millions of dollars. This one is Hims, okay? Hims acquires UK-based startup Zava as it expands international presence. This is huge. This company is in the very early stages of growth, okay? They acquired this startup Zava that already has 1 million customers. So that's 1 million new customers that can be buying different products from Hims and Hers Health, okay? Hims and Hers, they have the weight loss, the mental health, Hers Derm, Hims Dermatology, and sexual health products. And they're adding testosterone and menopause products in 2025 this year. So that's gonna add an additional margin, profit margin on their company. And they're gonna have 1 million new customers that they could sell those products to. So it's, you know, this is just a perfect storm here, perfect storm. And I do believe the stock is at a wonderful discount. So if you look at their PE ratio, currently trading at 82, a little bit high, but it is a healthcare company. So it's in that space, a little bit higher growth, right? It's a small company, 12 billion market cap. This thing could easily get to 100, 200, 300 billion. And if you look at their net margins, right, 8%, not bad, 5% the previous quarter, so an increase in margins, but their cash on hand is really what catches my eye. They could pay off their debt like more than, you know, almost not 10 times over, but, you know, maybe 4 to 5 times over. So this is wonderful. They have tons of cash, 273 million cash on hand, debts are low, 63 million. That's what we want to see. We want to see companies that could weather a storm and that have a lot of recurring revenue and good products. So Hims right now has, you know, it popped up on that news. On that Zava news, it popped up to 67. Thought this thing was going a little bit higher, but sold off quickly. And why did that happen? A lot of people are asking, well, it popped up 19% overnight, but why did it come back down? Well, there was a lot of people stuck in this stock in this range, okay, prior to the crash, prior to the market crash. And there's a lot of people stuck here at 72 as well. So when this thing goes back up and hits that level, expect a massive sell-off because people up here, you know, basically just want to get out. They're stuck in this stock. So that's what you're seeing. You're seeing people kind of getting out and, you know, relieving themselves of this stock that they bought at the top, right? But there's a lot of support here because people are also buying up this level. People are buying up this $50 level. every time it touches. So that's what I'm expecting. A nice level of support here until we get kind of maybe a nice U, maybe a nice little cup and handle here, okay, before we go higher. So right now, leaps are not the play here. Leaps are very risky. What you want to do is play it safe. So we're going to take a look at the portfolio, okay? Hood, as you can see, $128,800 in cash secured puts. HIMS, I have $99,400 in cash secured puts, so almost 100K. I have the 49s, the 48s, 45s, the 47s. What I would do is I would go 30 days out, okay? You could go July 3rd or July 11th. We could just go to July 11th, and I would just be safe and grab the 20 to 25 delta. So we'll go 25 delta here. That's gonna be the 46 strike, and let's do the math there. So you're gonna collect 255 bucks divided by 46. That's about a 5.5% return on your money in 37 days, okay? If you did that every month, that's about 66% return, okay? So massive returns there and very safe. The 46 level is gonna be all the way, okay, let's grab this line, all the way down here. So the stock would literally have to come all the way down here for you to get assigned. It would have to drop about another 13.5% for you to get assigned. So great discount you'd get on the stock, and very far away if not, okay? You're collecting 5.5% on your money in 1 month. So I'm really loving HIMS as a long-term bullish play. Fundamentals make sense, the growth makes sense, and they have some heavy players on their C-suite team. So wonderful stock. If you enjoy these updates, please give it a thumbs up as this helps boost it in the algorithm. I look forward to seeing you in the next one, and I'll link another video right here that you can watch, and take care.